Good morning and welcome to Trading with Larry. It's Larry Benedict, joined by Clint Brewer. And I apologize, we're having a little issues with our YouTube live stream. I don't know, maybe one of the firms that we've mentioned yesterday about payment for order flow shut us down. But anyway,
Are they front running the show?
exactly. And all I could say to start this show off is yesterday was wow. And again, it's just even though the market was up a lot, came in, it was still not down. I mean, the Nasdaq had a bad day, really because of one stock, Nvidia. Like Nvidia broke through the low that it traded at last week and actually traded $4 lower. And guess what? It's up 450 today. So it's right back in line with everything else. Yesterday, late in the day, I actually left my office at 3 o'clock. I had to run an errand, and I got to tell you, my phone was blowing up because we were blowing through levels because Trump again said something about China, and he said he got snubbed on soybeans. He just figured that out like literally 7 years later that they didn't buy one soybean and that we're gonna embargo cooking oil. I mean, we need somebody on our staff to figure out exactly how that's gonna hurt anybody. But that was what sold us off yesterday. I don't know what has us up today. I guess reflex reaction to the down and basically put us. You know what happens is people, it's kind of what we call in the business sided. People get sided, and yesterday people were probably, you know, had a lot of gamma because options are trading massive size now, and they probably had a, rehedge up, and they rehedged down on the low, and now they got people with gamma going the other way, and they're going to try to blow those people out, and we'll probably come back somewhere in the middle. But I don't think this volatility is over. I really don't think this volatility is all China related, because if it was, we wouldn't be moving the way we're moving. Again, I was reading some statistics. This is the longest time that we've spent, without, going through a moving average. I think it's like 132 days or something, which is probably back to April. Again, I think vol is too low for what I'm seeing. Vol, it traded like 21 on the close. It's probably back down at 19. And it's too low because this movement is, generated by his Truth Social stuff, but really the underpinnings feel a little bit different to me right now than they have. And a 40 handle up move in S&P isn't what it used to be 2 months ago. It's, you know, it could go down on the day. I'm not saying it will, but it could because now we're moving, you know, pretty large. And again, I'm not really looking for anything this week, but I am looking for the serial expiration next week to be very, very volatile. And, you know, potentially having, some downside action. Trades are still, I mean, gold's up another 50 or 80 today. I mean, this move is incredible. And I've been in the business for over 40 years. I've traded gold for probably 35 or 38 of those. And even during, like, I got into gold, or saw it, didn't trade it at the end of when the Hunt brothers were cornering the silver market. Um, and those were big moves. And obviously, on a percentage basis, they were big. But what I'm seeing now is just unbelievable, and I'm really trying to figure out why. I mean, I know why. I guess there's no supply, and every central bank is buying it, and they have this mantra that de-dollarization. But what's interesting is the dollar has traded badly pretty much all year. But as you know, it's been a tough trade. But it's like in the last 3 months, it's mid range. It's like 116 against the euro. Against the yen, it's even doing better. So I'm not understanding the de-dollarization trade, but I'm going to throw it to you. You could, sort of talk about what you're looking at, what you're thinking, and we'll go from there.
Yeah, so I mean, yesterday was definitely interesting. Some key levels we talked about yesterday on the show held. So we had the sell off in the S&P to kick off the day on just the tensions between Trump and China, and we came right back down. Pretty much the low on the day after the open was close to that. I think it's the 6550 area on the S&P, which that was the low from Friday. So we tested that. That's close to the 50-day moving average. That's the moving average you're referencing that we've traded above for 100 and some odd days now. And so I don't think I don't think it's a big surprise that that's where you saw buyers step in, because that's still going to be a key level to watch over the near term. I'll get to something else I think that's important to watch for the next move. But the big catalyst yesterday, and I think why you're seeing these follow through moves this morning, and including gold, is Powell's speech. So Powell gave his speech. It's the last time he's talked or scheduled to talk before their next meeting, the Fed's next rate setting meeting, and he pretty much he pretty much solidified that they are definitely cutting rates in October. But his comments were interesting because he said, so first on the government shutdown, we don't have payrolls report. I don't know if we'll get the CPI report. I know they're trying to get out the CPI report. I think that's more for the cost of living adjustment they do for some of the programs. But he said, I don't expect we'd be able to replace the data we're not getting. So he's basically going off what they have, which is a weak payrolls report from the last couple months. But at the same time, and he made comments, repeatedly coming back to this low pace of hiring that may weaken further. And so now everyone's saying, okay, October's a lock. And if you look at how the last the minutes from the last Fed meeting, they're saying they're going to cut at this meeting and the next one before the end of the year. But here's the other thing. But he said the economy is on a firmer footing. And he said there's a risk of slow pass-through of tariffs, and that's starting to look like persistent inflation. I'm reading the comments he made yesterday. So I don't know. I mean, everyone's all bowled up over the Fed, but I don't I don't know why they're setting the table for rate cuts when you had GDP coming in better than expected last quarter. He's now saying the economy's on firmer footing, and you've got core inflation at 3%, and now he's saying it looks like tariffs are starting to feed through to persistent inflation. But the markets are, taking it all as good news. Oh, and here's one more thing. He hinted that they are going to stop or at least slow quantitative tightening. This whole balance sheet runoff. So I think that's why you see, futures are up this morning. You saw a big reversal before Trump started talking about soybeans yesterday. I think that's what investors are focused on right now.
Right, but if you were trading yesterday, I'm telling you, you had your head blown off. Okay, I mean, it was, when you get a sell off in the last half hour or even less, it's unbelievable. And what's interesting, like right now, markets are up 47 on the S&P, they're up percent on the Nasdaq. Everything is calm and under control. But I'm telling you, yesterday, like I said, I wasn't in the office, but I had my machine, my phone with my trading app on it. And I have something called the wheel. So I'm looking at the futures up and down, like in NASDAQ, up or down, I would say like 20 points. I couldn't even find it. Literally couldn't find it. I was scrolling to find where the market was. That's how fast and how much we were moving. Right now, we're back to the algos in control. It's doing what it does. I don't know if it'll last all day, but I don't know. I don't see us out of the woods. I trying to really figure out this gold trade, which I guess there's nothing to figure out. It was funny before Eric went on a vacation. We were chatting, and I'm like, well, what if interest rates go higher in gold? What does it mean? Doesn't matter. What if interest rates go lower? What does it mean? Doesn't matter. What if the dollar's strong? Doesn't matter. What if the dollar's weak? Doesn't matter. What if the equity markets are strong? Doesn't matter. Like, this is a market that I don't know. And it's almost because it's commodities. So like it's easier to rig like or to control like the S&P futures. Commodities are harder to control. So I would say like the average move on the S&P maybe 40, on a daily closing basis with a 18, 19 vol is like 40 bips, okay? Commodities are like 2%, 1 to 2%, okay? So this kind of move in gold, believe it or not, is almost setting up like an S&P move. Like gold's exploded today, but it's up 1%. Yesterday it was up 60 basis points. And I'm looking over like we were looking at gold, we look at it every day and it was up like 51% for the year. It's now up 59%. It's been an explosion, but it's 8%. You know what I'm saying, on a 60% move. So, we're going to keep an eye on that. We're waiting for some type of reversal to put on a short. But as far as like opportunistic trader and trades we're doing and things we're looking at, we're still sitting tight. It's just, I want to make sure that our trades are doing well. I want to make sure they count. And right now, it looked to me like the beginning of this week, late last week, especially Friday, I was like, I did my I Ask Me Anything show where you can write in to feedback at the Opportunistic Trader and you can ask me questions. But beside that, I was doing the show and we were melting down. And I'm like, okay, we're back. I'm like, we're going to be giving tons of trades. But again, the environment is what it is. I mean, literally, I think if the S&P is up in here, it's close to an all-time high again. We're definitely within side of under 1%. I don't know what the S&P closing high is, but it's definitely in here somewhere. So even with the 2.5% down day, maybe we're 1% off the all-time high. Maybe we traded 68 and some change, but right now, markets are sitting tight. Again, I don't think we're out of the woods. I think there's a lot of upcoming stuff, and what's really interesting to me is whether or not Trump meets Xi, doesn't meet Xi, they move the meeting, they have the meeting. They're not they're not near any type of, I mean, a comprehensive deal the last time took like a year, like to even get a fake soybean deal done.
Yeah.
Like, how are they going to sit down and do a deal? They've tried this like 8 different times. They've met in Europe, they've sent the staff. It's all for naught. And the market, listen, the market is the market. You got to respect it and trade it every day. But, we have a government shutdown for over 2 weeks now. Okay. We have a China, I would call it a situation. I don't think it's, anything. We discussed that poly market has a 95%, if you looked at it today, probably, that Trump is not going to put tariffs on. So, he's taco. Everybody knows that. If the betting market is saying 90%, that's almost a certainty. So I don't know how he tacos out of this, but, we discussed yesterday whether it's 100% or 55%, it's just too much, and they're not gonna trade with us. And what's going to end up happening is China, like, we've isolated ourselves sort of from the world, wouldn't you think? I mean, Canada hates us, Mexico, doesn't like us, Europe, tried to do deals, who knows if they're signed. And what's going to happen is, listen, these Asian countries are wealthy, and you're talking about Singapore, you're talking about countries that are big and wealthy, and they're going to trade there. and they're going to trade maybe with Europe. And I don't think it's going to hurt them as much as we think it's going to hurt them, and, as far as AI and making chips, they can make their own chips, without a doubt. They could trade with Taiwan Semi, so I think we're in an interesting spot, and the markets are, just taking it for granted. So, I think volatility sustains here. Obviously, today it's coming in, markets are higher. Let's see if we can close higher today. But, you know,
You know
it's
what? Here's one thing. Here's what I think is interesting about kind of this most recent U.S. China flare up, and it's that it's becoming less and less about the technology and more about commodities. Like if you look at what sparked this whole thing most recently, it was all around China doing more export controls on rare earth elements. That was a big part of JP Morgan coming out the other day and announcing this $1.5 trillion national security plan. Part of that was, focusing on domestic minerals. So like, that's one aspect of the commodity trade coming into it. I know we just released a new report for subscribers talking specifically about this, about how commodities are really at the intersection of all these AI data center deals that you keep hearing about. And what's interesting is that, open AI deal here, open AI deal there, all these, some of them are just pie in the sky numbers, but all these deals are benchmarked. When you look at the benchmarks for triggering, certain investments or whatever, it's all tied to gigawatts of power. Like that's how they talk about deploying this thing. It's all gigawatts of power. And, there's all this hype around rare earths. Like MP Materials has gone from $20 a share in May to it's trading over $100 now. And there's all this speculation around these uranium names. But like, look, I mean, nuclear, I was reading something the other day. Nuclear can only meet about 10% of the incremental demand for power that's going to come from data centers, and so that's putting other commodities in the spotlight, which is something we talked about again in this report we put out for subscribers the other day. But it's interesting how the tension is shifting toward the commodity side of the equation as we sit here and talk about rare earths and gold. And so, it's like, but there's way more to it than just that.
Well, it's funny. We talked a little yesterday, and we were talking, and it was funny because it feels a little bit different here. Um, like the S&P is up 50, which, is not even a percent, but for our world, that's a big move, especially on an opening. But look at Bitcoin. It's crapping out again today. And it looks like it wants to trade back to that 107 level. And these are what we looked at as risk on, risk off type trades, So that market really looks skittish. Again, nobody, and I mean nobody that's trading that market has lived through a crypto winter, or, something where, Bitcoin, or especially the altcoins, which didn't even exist back then, didn't go up for years and years and years. So, we haven't had any of that. It's an overowned asset. But it's interesting that the S&P is so firm today, and I think maybe it's because they caught everybody yesterday. You know what I'm
I
saying?
Yeah,
Everybody got caught at the end of the day.
I think
People
the
were
most
wanting to hedge risk. They were freaking out. And basically, I think, we got lucky in my book, that, we're not really making money, but, we run usually, pretty short. But we're not losing money because, the stuff that we had came in so much that we're just literally at yesterday's prices. Like I'm looking and we're like, the Qs are like 50 cents above yesterday's price before this came out. So, if you didn't get aggressive shorting, then, or, hedging, then you're okay today. But, looking at the markets across the world, I'm looking at the FTSE down. None of this really matters, I guess. It used to matter. Like, that was like my whole mantra when I was trading my hedge fund for years and years and years, was looking for these clues that would give me an idea for what would go on today. But what I've realized, especially over the last 4 or 5 years, is those clues are actually fake. Meaning, like, you want to actually go the opposite of that clue, which makes no sense, but it makes perfect sense because the algo is like, okay, we're going to trick these guys to think this. Like I'll give you an example. Like yesterday, Nvidia got smashed, right? Um, the weirdest part is Nvidia was down $6 and all markets were positive. Okay, this is the biggest weighting in every index. Okay, then what happens on a day like today is they bring it back $4 and now they got the move back plus. So, like, it was a scary buy, I get. I mean, listen, Nvidia yesterday closed pretty much on or near the low of the day. Um, and now it's up $5 coming into the opening this morning. That's pretty impressive, to be honest. So, it had no bid yesterday, and today it has no offer. I mean, literally, think about it. It started yesterday at like 189 ish, and it got down to like 180. It was down like $8. It's up $5, pre-open. So,
I
yeah, these
yeah,
are these are all tricks.
I think the most interesting price action that happened yesterday when at the close is that we had the Nasdaq finishing down about 76 basis points and large value finishing up about 77 basis points. Like there was definitely pressure under the hood in the growth space, which matters a lot because you've got, the 10 biggest stocks in the NASDAQ make up 52% of the Qs, right? And so I think the weakness in those growth names is worth watching. But then, yeah, I think you mentioned Bitcoin. I'm going to try to share my screen really quick. Hopefully my computer doesn't crash out here. But I just want to show everyone Bitcoin's price action really quick and the level to watch because, yeah, I mean, we had a nice bounce Monday in the market. We had a nice intraday reversal yesterday, but look at how weak Bitcoin's trading right here. This blue line's a 50-day moving average. And we talked yesterday about the range that this thing's been in. So, going back to July, you can see, this highlight area, this overall range, but we're trading right near the low end of this range. Like this is a really important level to watch, this 108, 109,000 level on Bitcoin. And you would see kind of something similar with Ethereum too, where it's trading right at some of the recent closing lows, at least, not the intraday lows. And so this, like if you start to see Bitcoin and Ethereum breaking down through here, like this is, I mean, these are, the most speculative of speculative asset classes. Like if you start to see these things breaking down out of those ranges, I mean, that's a huge warning for at least the growth trade. I mean, if they're coming after crypto, do they start coming after Nvidia and Amazon and Apple and the rest of them?
Yeah, I mean, you're not going to see that today on the opening. We're going to have to just wait to see. But I mean, every morning, I'm looking down at these put prices that are so far below the money, like 200-point puts are bid for the day. Obviously they're just protection, but maybe this means that the large hedge funds and institutions out there don't have their hedges on, and Friday. I mean, I think people got hit on Friday. I mean, obviously they didn't sell, so they'll get it back. One market that I was very bearish on, turned bullish yesterday was the oil market. And the oil market is actually up 1.5% today. I actually think the low potentially could be in for oil. Or it's one of those, hey, you got all the good news you could get, and the market traded down, and now the market is probably cheap. In my mind, the market is still cheap. I would look for the close above 60, and that would probably set a trend change. But yesterday we liked it. It sat all day, and it actually sat till this morning. But right now, it's up. It's not a crazy move, but it's up 1.5%, and it's back off the low. It traded down to $57. I mean, think about oil for a second. And I started trading oil in like 1985. It was almost the same price that it is today. I mean, talk about the worst performing asset in history. I mean, this has got to be it. And I think it's like a contained rig in a way, meaning like they we've traded it. I've traded oil at 145. What's funny? I remember the flash crash. Were you trading during the flash crash?
2010?
Yeah.
Yeah.
So the flash crash, they had a flash crash in oil one day. Oil went down like 25 or $30 in a flash of an eye when it was trading at like $150. Um, I remember that, but oil, I guess overall is fairly, I believe, fairly cheap. But it's a tradable asset. I like it here for a trade. I liked it yesterday. I still like it. But you got to take your profit. If you get a 2-3% move, I would take it. And I'm really sitting here focused on gold. I'm not doing anything yet, but if gold comes in $30 today, I will start shorting it. I
That's
mean,
what I was going to ask. That what's your level on gold? Because yeah, if I look at gold, that's like there's nothing there for me. Like you definitely don't want to chase it, but it's been you don't want to step in front of it either if you're trying to find a level to short it. So what's the initial hint that this run's done and we could see a reversal?
I I I would have to see a weak close on volume. I would like to see a reversal of, like, let's say it's today it happens. You know, it's up like $40, right? $50 on cash. It's even higher in futures. Um, that comes in to plus 10. Maybe I start to short. But one thing I want to tell people out there is I would not short the outright, meaning the future. I would not short 100 delta product. I would use options on GLD, which are highly liquid, and then either buy puts outright or buy a put spread or sell a call spread. But the strategy we like is, what we call defined risk strategy. Okay. So we know what we're going to lose, and that's important. Like I am short a little bit, tiny bit of gold, but my spreads are so far out of the money, and I spent no money to put them on, that it's not the end of the world. But if I sold the commodity right now, I'm dying. You're getting blown out of the water. So we're going to stick to, options on this. And something I'm looking at, I have it on my screen. Thomas behind me knows what to do when it happens. So we're just waiting on that. And, overall, markets are, it's going to be interesting to see, what mantra got everybody. I understand this is a trade that put everybody offside last night, but like, what's the mantra today to be so bullish? Like, what am I missing? Like, what
I
happened?
I think it's follow. I think it's either follow through on the Fed and just what it means for the rate outlook, but then you've had more really strong bank earnings this morning.
Yeah, no,
Uh,
the banks have, right, but it's interesting. Like, I felt like the bank earnings were obviously good, but here's my question, and this is what I don't understand. You know, I think Goldman or one of them said they had great trading profits. Okay. But I thought these banks don't trade. I used to trade when I had my hedge fund, and even before, when I was at Spear Leads, I did 75% of my trading with banks. Okay. I would call up Goldman, I would call up Bank of America, and I would ask them for markets, and I would trade all day with these guys. they got out of that business. They weren't even allowed to take risks. They would like cry on the phone. Oh, we can't. Like, so where are the trading? Is the trade? Are they considering trading profits commissions? I don't know. It may be, the commissions they're charging. I'm not sure, but I know they're not taking huge risk on the balance sheet, or really they're not allowed. So I'm not sure when they say, trading gains, what that actually means. So it may be commissions or whatever, but to me, that
Are they still serving as market makers?
no, there are no market makers, Clint. Literally, no. I'm being dead serious. I've discussed this, multiple times on this podcast. I was a specialist, which was a market maker at the highest level. I ran a product, and I was obligated all day from 9:30 to 4 to make a market fair and orderly. That was the thing, fair and orderly to the public and to the other traders. And if we did not do that, we got fined. And if it got really bad, we lost the product. We would lose the product. Like, we were the specialists in IBM. If we didn't make a fair and orderly market in IBM, which at that time was the blue chip bellwether in the 80s, 90s, and, probably died in the 90s, early to, into, yeah, probably the late 90s. But they would take the stock from us. We would lose the listing. So right now, who are they going after? Like in Nvidia right now, nobody is providing liquidity. They don't have one person out there providing liquidity. Yeah, Jane Street's a market maker, Citadel, Virtu, but they're not really making markets. To me, making markets, and it's funny, we actually in 1999 into 2000, when I was at Spear Leads, we got listings for actual internet stocks back in the day. We were making the markets on them. Okay. It was the craziest thing. But we tried to keep a fair and orderly market the whole way up and the whole way down. And we don't have that here. And that's why we're having the moves that we're having. Think about it. Just back yourself up to 3:30 yesterday or 3:40 when this Truth Social BS post comes out. Think about what he said and why that would move the market the way it did. What did he say? He's embargoing cooking oil? I don't know. How big could that market actually be? I think it's more of a symbol, but I think if you really read into it, he's like pissed off or bummed out that these guys did a fake deal with us in 18 into 19 and didn't do one thing they said they were going to do. And the farmers got totally screwed by this. Um, so I think any deal they make will be hard to police, almost impossible. And, the story is yet to be written. And let me ask you this. Let's say, you know, on Friday, he said he was canceling the meeting, which he's a bad guy. Then on Saturday, he said he's a nice man. Then he's now coming out with this cooking oil thing. Okay. My question to you is, why would they meet? What, other than like just for a photo op or whatever? Why would they meet? Like what? These talks are coming at a economic level, and it was interesting. I was watching Trump from the White House yesterday, and they were asking him like economic stuff, and he literally had no idea. He's like, "You got to talk to my economic team." Okay, so the bottom line is like, who's negotiating this deal or whatever, and how could we even do a deal? So really, that
I don't think there's ever going to be a deal. I think you speaking to the whole 2018 episode on soybeans. I mean, that took a year to cover, whatever deal on soybeans. Now we're talking, tech and rare earths. Like there's not going to be a deal. It's all just it's showboating, and they're just going to keep. They'll meet, they'll talk, whatever, but they're going to keep kicking the can down the road. And all each side's doing is buying time to wean itself off the other, because China knows they need us for tech. We need China for certain things. Like it's almost impossible over the near term to sever ties without just absolutely, shooting yourself in the foot, or maybe even just completely cutting off your foot. Um, I don't see how they do it, and it's all grandstanding, showboating, and it'll always be a headline, and it'll get kicked down the road again. That's all it's ever going to be.
I agree. I don't know why the markets are so hopeful. I mean, they're not even talking. Like, do you know how many times they met in Europe in the last 3 months, 4 months? It's like ridiculous. What was the guy, Jameson, whatever? I mean, these guys are, you know, they can't get through. And I think China is facing 55% tariffs. They're now used, Clint, they're used to it. They know they're not trading with us. So I don't know, like, you can't hurt them because you already hurt them and they're living with it. It's like giving someone a dead arm. Once the arm is dead, you can hit them another 10 times and it will not matter. But it's a little crazy. That's what I would say.
What shift gears here? You've been watching Tesla lately? That's a name that's kind of not been in the headlines much lately, and we traded that a while back, some calls. Now we're getting a pullback off of the prior high. That's just been kind of a, I don't know, orderly decline so far, heading toward, not to the 50-day moving average yet, but heading in that direction. Have you been watching that name at all?
Oh yeah, I watch it and trade it pretty much every day, and we actually were short it yesterday. We covered, um, got down to like 411 area. It's now 435, so it's not really down that much from the high of the move. I I don't know. It's kind of, the trade is not clear to me here. I think you could buy dips down at the lower levels, but we're gonna have to. We're just gonna have to watch it for the time being. But it's an amazing thing. Since we've been on the podcast for 30 minutes ish, maybe a little more, the S&P futures haven't moved 2 points, $2. It's just sitting here, up like $46, sitting. And what's amazing is at 9:30, my machine will start shaking up and down with, whatever. And then, we'll sit again. And then after yesterday's trading action, I don't know how everybody is so complacent. And the biggest one I'm looking at today is Nvidia. Think about it, Clint. Nvidia was on its deathbed yesterday, traded under 180, and now it's 185 and a half on the opening. I don't know if it received an upgrade again. How can people upgrade it if they already upgraded it? They're like, oh yeah, the best is, I love it. It never traded 200. It traded up, but it never traded like 200. And the guy has a $210 price target. He raises it 310. He doesn't realize the market cap will be 10 trillion. This is what we have. So I'm sure it received something today. Because it's up
Well, what,
5.
what I would watch with Nvidia right here is the pullback into yesterday brought it down to about the 180 level. That was kind of the breakout area from some sideways action going back to August. That's also the 50-day moving average. So, logical spot for a bounce, I guess. But the thing I would watch next for Nvidia is you've got Taiwan Semiconductor. They report earnings before the open tomorrow. That'll be that'll be a huge event for all these stocks, for Nvidia, for Broadcom, for like all road, all these open AI chip deals, like all roads pretty much go through Taiwan Semiconductor. So keep an eye on them tomorrow morning.
How's their factory going? Trump was touting they were building a factory in Arizona. It's probably a cactus farm or something. I mean, come on.
I don't know. All I know is, look, 90% of the world's most advanced semiconductors are made on an island sitting right off of China. That's the flashpoint in all this right now.
Yeah, Well, listen, I'm sure it'll be a decent number or good. Just my thought though is with, I mean, the valuation of Nvidia is larger than the valuation of all of Japan. Okay, the whole Japanese stock market, the whole German stock market, and in Japan, you got real companies, Samsung, SoftBank. You got real juggernaut companies, and this one chip company that just makes chips for the most part for AI, um, or sells them, um, he's got a $5 trillion valuation. So, I don't, I don't know, but hopefully we'll get some trading today. You know, the gold continues to go higher as we're on the air. So I guess that trade won't happen today. We'll have to wait to tomorrow. And, um, and that's it really. I don't know, I'm sitting here and it's crazy. Like yesterday, the Dow was up 375 points at one point, and the Nasdaq was down 250 points. I mean, this is what we got. I guess, like you said, there was outperformance. I think a lot of that probably happened because of the banks. They've been performing well. Bank America's on a high. These stocks are all on a high. Maybe it's a good area to look at to short some stuff. I don't know. I mean, I'm getting calls from people yesterday saying we're in a recession. They're saying no one can see it, but we're in a recession. I don't know if we don't know the numbers, but they're saying there's a massive slowdown. That's a lot of the reason why crude oil is trading down is because of China, etc. We'll keep an eye on that. And I don't know if there's anything else you're looking at, but for me, I'm watching the S&P. It's firm. If it gets weak, it could get interesting. I don't know if the market has the moxie to do what it does. I always say the market can't do what it does two times in a row. The algo's not set up. But I was surprised after yesterday's close to be up, 40, 50 handles. I mean, I'm just not understanding. Like you are saying, the Fed was more dovish. I think he was, to be honest with you, I think he was lost. Like, I don't even know what he was saying. He's ending the tightening cycle. I mean, where was he 6 months ago with this or more? You're supposed to be in front of this, not behind it. So, and again, that was in the market early in the day at 10:30, and then we whooshed down on the close. Nasdaq closed down over 200, and then you walk in, it's up 240. I think Nasdaq wasn't even this high yesterday. So, I think they caught people off guard. Let's see how the first hour of trading goes. Again, looking for a short spot in gold with defined risk. I'm looking to stay long oil and maybe add to positions if oil gets up a little bit. I think, it doesn't really belong down here. It's here for a reason, but it doesn't really belong down here. So, a close, above 60 changes the complexion of the market. So we'll keep an eye on that. And really, that's what I see. So I'll throw it to you. You can close us out today. And, I wish everybody a very good trading day.
Yeah. So near term, two names I would keep an eye on is one with Nvidia around this 180 level. That's the breakout level, where resistance has become support, but that's also the 50-day. If we start to see any weakness below 180, keep an eye on that, especially tomorrow morning after TSM reports earnings. That would be, a big sign for the market. One other stock I'm keeping an eye on, we mentioned Tesla. It's been kind of an orderly pullback off the test of the prior highs. I would see if maybe we can get a counter trend move rally in Tesla, especially if it starts to get a little closer to the 50-day moving average. And I think there's like a $400 support area there. But then for the broader market, I'm keeping an eye on stuff outside the market, which is one's crypto. So we talked about the levels on Bitcoin and Ethereum. If you start to see those break down, I think that's a big big warning signal for the rest of the market. And then two is keep an eye on VIX. We're writing about key VIX levels that are going to be in the e-letter tomorrow. That's free to subscribe to and sign up for. So Trading with Larry is the e-letter you want to check out. But we're going to talk about the this 22 level on VIX. We've hit it like, either intraday or closing basis on for the last session. So, and that's a really key level going back to the April lows. So if we start to see VIX poke above that 22 level, I think that can draw in some of these institutional funds that like to use VIX to determine their equity exposure, and you're going to see them start to sell.
Well, I would tell you a little bit. I'm going to add to that a little bit. It's interesting. Like I said before, we're like less than 1% from an all-time high, and VIX feels like, especially yesterday, like early in the day, it was going to explode up, and we're going to have a dislocation day that's going to be more than 2%. And I think you could see VIX really go wild. I think people are under hedged. I think they don't have it. And I think, it's a really good way. It's a hard long being long the VIX because it's like a decaying asset. And when the market's up, you feel terrible. But if we do get a 5% correction, I think a 5% correction could take VIX up 50 to 100% from where we are, back up to 30 or 40, depending on how we do it. So that may be the best way to play this next down wave when we get it. But anyway, we're getting close to the opening. Clint, I always appreciate you joining me. Thank you so much. You give great insight, and I'm not level-headed. You're very level-headed. So I appreciate you joining me, and we'll be back to everybody tomorrow. Good luck trading. Remember, look at oil. Look for a potential reversal in gold. I would not touch it until it goes down 30 from here. And watch the S&P. What's weird, I'll leave you with this. We did a 45-minute show and the S&P didn't move 2 points in the whole show. So I don't know what's going on. Maybe it's shut. Maybe my machine stopped. Anyway, keep an eye in Nvidia. It's up almost $5.50, higher than where it closed on Friday again. And, we'll see how that thing trades. And we'll be back to everyone tomorrow. Enjoy. Have a great day.